Wendy, thank you so much for joining me on this video. I've been really excited in getting to know you and some of the more of the other team on the London Stock Exchange and the AIM group. Love what you guys are doing at the LSE AIM in terms of helping startups get access to capital, help them go public, and have, frankly, what I think is one of the best small cap IPO products in the world. Can you tell us a little bit about yourself and when you started with the LSE and where you came from?
Great, thanks. Thank you, Jonathan. I'm very happy to be here with you today. So I've actually joined the LSE in February of this year, just shortly before lockdown. And so my role is a business development manager on the primary markets team. And I'm based in New York, and my role is primarily to provide guidance to companies all across the Americas on listing matters and raising capital in London. And prior to this, I spent most of my career in equity sales at Société Générale, which is a large French bank, and I was also based in New York there as well. And in that role, I primarily work with institutional investors. So I think this is a good transition for me to just work more closely with corporates.
No, that's fantastic. Can you tell me a little bit about the differences it feels to me from the outside that the London Stock Exchange is a much more kind of internationally focused market than some of the other exchanges are. Can you talk a little bit about that? It seems like the companies that list on the LSE are a bit more globally focused, as well as it seems like the investor base is also a little bit more globally focused. Can you talk a little bit about that?
Yeah, that's completely right, Jonathan. So, globally, the London Stock Exchange is consistently the top 5 most active exchanges, but it is the most international of the other exchanges. Well, first of all, if we take a look at Europe, London is by far the most active equity market in Europe. So we've had about 3 times more deals and over 2 times more capital raised than the second most active exchange in Europe. And as I mentioned, globally, we're usually consistently in the top 5, but we're the most international. So you may be surprised to find that actually we already have 135 companies from the Americas listed in London. Yeah, and of that, 79 are from the US, making up an aggregate market cap of about $600 billion. From Canada, we have about 28, making up an aggregate market cap of $30 billion. So there's already a lot from the Americas listed in London, and a lot of this has actually accelerated in the last few years. So since the start of 2017, we've had about 58 companies listed from the Americas. That's an average of about 14 a year.
Wow, no, that's fantastic. When you actually get companies from the United States, from Canada, from the Americas listing on London, why do they choose you guys as opposed to like a NASDAQ or a New York Stock Exchange?
I think there are many reasons, but I think the key differentiation that I noticed when I joined the London Stock Exchange is just the focus that we have in London for smaller companies to be able to access capital at an earlier stage of growth. Whereas NASDAQ is typically perceived here as the growth exchange, but actually, if we take a look at the average market cap at IPO for companies that list on NASDAQ, it's about $1 billion. That's not really that small in the grand scheme of things. Whereas if you take a look at London's AIM market, the average market cap at IPO is only $120 million, which means that you don't need to be a unicorn to access capital in the public markets in London. And I think that's really quite a stark difference. If you take a look at the revenues that you need to be when you go public, in London, typically in the tech sector, for example, you can be about $10 million of annual recurring revenues, and you could be a good candidate for going public in London. For some sectors, for example, healthcare, you can actually even be pre-revenue, which I think is interesting. Whereas in the US, you may be looking at a threshold of at least $100 million of annual recurring revenues to go public.
Wow, no, that's fantastic. So that would almost be like a Series B kind of round in the United States. So you guys, if a company was looking for like Series B capital, they could actually IPO on the London AIM instead of kind of going up and down Sand Hill Road in Silicon Valley and actually looking for that B round capital. Is that accurate?
Yeah, I think so. And I think the difference here is that you'll be accessing primarily institutional investors. And actually some large, highly sophisticated, high quality institutional investors can invest in small microcap companies in London, whereas in the US, they may be looking at a higher market cap threshold to get involved. So basically, companies in the likes of BlackRock, the Capital Group, Legal & General, Schroeder, et cetera, can and are invested in companies on AIM, which I think is very, very interesting. And also, investors, UK investors tend to be agnostic as to whether you're listed on the AIM market or the main market of the London Stock Exchange. So you can be a smaller company and still have access to these high quality investors. And I think this a lot of this comes from the history of just public institutions in London or in the UK stepping in to bridge the funding gap that was missing from private funding in the past. So the institutional investors there are comfortable investing in smaller companies.
Interesting. Now, one of the things that I hear very, very frequently outside of Silicon Valley, it's really hard to raise, $10 million and above, $20 million and above. There's really only a handful of venture funds that are truly global in their focus that write $20 million plus checks. And it sounds like a London AIM would be a great option for a lot of these companies. Yeah,
I would think so. I think for the company with the right growth strategy, right investment case, the company would be able to access growth capital in London. They would be able to access a nice diversified investor base in London. So I think that could definitely be a viable path for certain companies.
Now, when I think about an IPO, I'm traditionally thinking about like U.S. legal and regulatory costs. Is it going to cost me like $2 to $4 million to get a company to IPO in London? Because raising $20 million or $50 million in an IPO in London, if it costs me $2 to $4 million in compliance and regulatory, is kind of a no deal for me. Is that what the costs would be in the UK for a listing?
Well, the listing cost in London is typically lower when compared to the US. So if you're taking a look at a smaller IPO on AIM, for example, usually the cost would be about 4 to 5%. On main market, because it's larger companies, it'll be about 2 to 3%. If you compare that to NASDAQ, it's usually around 6 to 7% of the cost for underwriting. But if you take a look at just the ongoing cost of maintaining a listing, it's typically lower in London as well. So, and a big part of that is because London has a half yearly reporting regime, whereas in the US, it's a quarterly reporting regime. So just the time and resources that we spend to maintain that would tend to be more expensive in the US. And I think litigation risk is another very interesting piece that just cannot be ignored. So there's typically much lower litigation risk in the UK. If you take a look at just the first half of this year, for example, there's been 182 new securities class action lawsuits in the US alone, just in the first half of the year. But over the last decade, there's been 3 lawsuits in the UK, and actually we found 0 against foreign listed companies in the UK since 2008. I think that's quite a staggering difference.
So 180 in the first half of this year in the United States,
yep.
as compared to 3 over the last decade in the UK.
Yeah, and 0 against foreign listed companies in the UK.
Wow,
so that's quite a staggering difference.
That's huge. And so, do you guys have the equivalent of like a Sarbanes-Oxley? Like in the United States, I know that like officers, founders of companies, if they screw up, or if there's a misrepresentation or something like that, they might actually face jail time in the United States. In the Sarbanes-Oxley, that compliance is really kind of high cost and kind of. Do you guys have the equivalent of that in London? Or my guess is probably not.
No, we don't have Sarbanes-Oxley in the UK or the equivalent of it. And for AIM companies as well, the regulatory structure is a lot more flexible. So I think it's quite suitable for companies, especially a younger stage of their growth, where they're trying to still focus a lot on operations, but then at the same time access capital markets. So the AIM is actually regulated by our exchange. There's a separate entity within the London Stock Exchange that oversees the AIM regulation. And companies that list an AIM would have to retain a nomad or a nominated advisor that helps guide them through the listing process and guide them as they continue to be a listed company on the AIM market. And it's sort of like a hand-holding process, but I think it really helps younger companies as they continue to grow. And the regulation there is a lot more flexible.
Now, if I raise 30 or $50 million in a smaller mid-cap IPO on the London Stock Exchange, how hard is it for me to raise follow-on capital? Like, is that it? Am I done, or are there opportunities, or how hard is it to go through and raise capital? Do I have to go through and issue another prospectus? Is another kind of 6 or 9 months of kind of legal and accounting work, or what's that process like?
I think that's actually very, very interesting. And I think that's really highlights the value of being a listed, publicly listed company. So while the process initially for getting listed may be long, and it can take 4 months, 6 months, or 9 months, depends on how ready you are at the beginning. Once a company is listed, they can access follow-on capital rather easily. So typically, a company on AIM can raise up to 20% of their share capital in an accelerated book build process, which means they can access the capital overnight, and they don't have to issue a prospectus. And we've actually had many companies on AIM, and including a number of them from the Americas, that was able to access follow-on capital even during the pandemic. And actually, in London this year, despite the pandemic, every sector has been able to access follow-on capital, which I think is very, very important. And if you take a look at, and I think let's take a look at sub 1 billion market cap, for example. In the US, for companies under sub 1 billion market cap, about 86, 87% of the companies that were able to raise capital were in the healthcare or SPAC sector. So they're either healthcare or SPACs, whereas in London, it was dispersed. It was quite evenly distributed amongst every sector. So it just shows that in London, you can be a small company, raise capital initially, and be able to continue to raise capital later on as you reach certain milestones of your growth.
No, that's fantastic. Are there kind of a couple of shining examples over the last 18 to 24 months that you can think of where the company's kind of listed and kind of what their trajectory was? Are there a couple of examples that you can think of? So
a very good example I would give is Boku. And that one is a mobile payments company that does direct carrier billing. And this is actually a very interesting one too. It's a San Francisco-based and VC-backed company. So it's backed by a number of well-known Silicon Valley VCs such as Andreessen Horowitz, Benchmark, Index, Khosla. And actually, they were able to sell down some of their stake at the time of IPO and subsequently in follow-on offerings as well. So, and the interesting thing about this is that 2/3 of the proceeds raised at IPO was actually a secondary sell down. So that's another point as well. So, London UK investors tend to be a bit more comfortable with secondary sell down at the time of IPO. I think they are just a bit, reasonable in the fact that they understand, at some point, private investors will be looking to monetize their investments and redeploy into other opportunities. And so they understand that if companies eventually need to be listed and stakes need to be sold down. So, Boku they raised about $60 million at the time of IPO on a $166 million market cap. And wow. That market cap size, it's in the US, I think it would be considered a bit too small to gain a lot of attention, but in London, that was not the case at all. So it's now grown to about $470 million in market cap. So it's done very well. About 10 months post the IPO, it managed to come back to market to do another capital raise, and this time it was 100% secondary. And in June of this year, even in the midst of the pandemic, it did another follow-on offering to raise money for an acquisition. So I think it's a really good story of just how secondary sell downs can be done in London, and also a small cap company is able to tap the markets for raising money to pursue their growth opportunities.
Wow, no, that's fantastic. So a payments company based in San Francisco decided to list an IPO in London at $120 million market cap. And then how long ago was that? It was
$166 million market cap or so.
$166 million market cap during the IPO. That valuation has since tripled, and they've been able to actually go out and raise money 2 more times in the period since their IPO. And the VCs have actually been able to sell down some of their stake. And so the company's been growing in value, even though some of the original investors are actually taking some money off the table.
Yes, that's correct.
Wow. That's fantastic. Wendy, thank you very much. I think this has been fantastic. I think it's been incredibly educational. And if people want to get in touch with you guys at the LSE team, what's the best way to do that?
So I think the easiest way probably in this day and age is to reach out to me or my colleagues via LinkedIn. So I'm Wendy Huang, and last name is Huang on LinkedIn, or my colleague Chris Mayo, Mayo on LinkedIn. And For those in the tech space, my colleague who's a tech specialist here, Neil Shah, Neil, and then last name Shah on LinkedIn would be good as well. And we look forward to having discussions with you.
Awesome, Wendy. Thank you so much. I really appreciate your time. Been incredibly educational, and I really appreciate what you guys are doing. Thank you.
Thank you, Jonathan.
Cheers.